Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. So what a great interview. I need to mention that too. I was gonna I have to mention that to Dale and to tell him what a great interview that was with Danny Blanchflower. I hope you guys enjoyed that. I thought it was really good and it was very enlightening. So it was awesome to have a central banker on as as an interview, just kind of get some of the insights. And yeah, it's pretty cool. Hopefully you guys really appreciated that. And I was going to tell Dale what a great job he did. Hold on really quick. Hold on really quick. Yeah, I was gonna mention to Dale what a great job he was doing. Sorry guys, I just got sidetracked. But I got pulled away because of my my animals. It's funny. We sit here and we talk about in the chat room. Sometimes we've been talking about dogs because one of our traders in our chat room, Benedict, he got a new Shiba Inu. And for those of you that don't know what a Shiba Inu is, you should Google them. Cutest dogs on the face of the planet. I had one 20 years ago. It's like when it was like the first decade they came to the United States from Japan, and they're just my favorite dog to this day. No offense to my other 3 dogs, but we talk dogs every once in a while. But I have a dog that's almost 15 that I have to care for. So it's a lot of times I have the greatest intentions of doing something, and then I get sidetracked taking care of a 15-year-old dog. It's what is that the equivalent of a 120-year-old person. So anyway,
They've actually changed the calculation of years in dogs and cats.
They did. When did they do that?
It's some time now. It's not
not 7.
It's not what's the English word? Not every year counts the same. You know what I mean?
Got it. It's like a sliding scale, maybe.
Yes. So the dog is supposed to be, I think, around 21 by the 2nd year of life, and then it's 4 years per. It's 4 human years per year.
Oh, that's interesting. Okay.
Yeah.
Well, my dog's still older than dirt. She's a bigger dog, but man, end of life situation for anything is never really pretty. You know what I mean? So that's and I deal with it every day for like the last year. So it's challenging. I love her. She's like been our family dog and the most gentle dog and gentle soul on the face of the planet. Like literally, like every she's still just so energetic, but man, she's got her end of life issues, so
that's the downside with pets, that unfortunately you have to bury them.
It is, and the interesting thing is with all my pets that I've had, they've been kind of it was like a heart attack or that type of thing, whereas quick she's been going on for a year that I've been dealing with like some of these issues, and it's not easy. It isn't. It's far from it. Anyway, that's neither here nor there. And I could sit here and just talk. I'm going to end up, just you need to cut this out of the recording, Steve. So
okay.
Let's make note of this. Please cut this part out of the recording. So here, I'll start again. Hey, good morning, traders. This is Blake Morrow, and you are listening to the Morning Edge webinar. I want to welcome you guys and gals. And we're going to talk about the dollar Canadian because, and we're going to, and if you weren't here live, we were actually having a previous conversation, but we had to start it here because it went on for a few minutes talking about other things that really are not super important. Well, not to everybody else but me. And so that means it's really irrelevant. So, but what we've got to talk about today is we've got to talk about the move that we're seeing in the dollar Canadian and obviously all the other currency pairs too. But this is ahead of the Bank of Canada today. And the thing that I want to reference with the move that we're seeing in the dollar Canadian, if you look at the last like 2-3 weeks of consolidation, we're above the 88% retracement. So what I'm pointing out here is we've already surpassed the 88% retracement, and that to me risks a move higher. Now, obviously, we have to wait for the Bank of Canada. There's a let me pull it up for you really quick. There's this Bloomberg article. So right here, and I've just put in the chat room. So I'll put it in. I'm going to put it in the chat here in our Zoom. So you guys have to grab it really quick before I end this thing. So, all right. So there it is. There's the Bloomberg article. So the market's expecting the Bank of Canada. I just said Bank of Canada. The Bank of Canada to reduce its purchases, bond buying purchases, basically, kind of taper a little bit. What's really interesting about that is the Canadian currency is weakening ahead of this potential. So what does that mean? Well, that means that if the market comes in line, then meaning that the Bank of Canada does taper a little bit, then what we're probably going to see is we're going to see the dollar Canadian slip back towards 126, maybe 125.80, maybe kind of mid-range here, and then take cues from equities, right? But the risk is, and this has been, this is kind of like what I've been talking about during the week ahead video. Well, this last weekend was that what if the Bank of Canada becomes a little bit more FOMC-ish and they become a little bit more dovish, and they're like, maybe we should hold off on that and keep the liquidity flowing, especially with this variant hitting Ontario and some, lockdowns. And let's say they turn a little bit more dovish, or maybe they do actually dial back some of the bond purchases, but they are extremely dovish, saying that they'll add right back to them if they have to. You could get a move higher in the dollar Canadian, and then compound that with an equity market that looks pretty weak right now, where you have the S&P that has this bear flag pattern that Steve was just so aptly pointing out there on the FACE webinar. How about if we get a move lower in equities? Well, that's going to boost the dollar Canadian. So so those are just some thoughts as we go into today, and obviously, if you're not aware, I'm long the dollar Canadian and I'm short Canadian yen. So there's nothing more than I want right now than the dollar Canadian to race up to 130. So just if you're like, oh, Blake, he's just talking his book. Yeah, I am. But also, let's point out the fact that the dollar Canadian's been holding up really well despite all this, despite stocks being higher, and you see crude starting to roll over. I think the risk is that we start breaking out. Now, where is the breakout point? So let's figure out where resistance is today. Resistance is 126.50. You can see the top of that resistance zone right there. Okay, that is resistance for the the dollar Canadian, 126.50. Beyond that is 127, which will be the 127% extension of this move. Remember, we were just at 124.70 yesterday. We're, really close to. All right. So we've gone pretty far in 36 hours. Let's not ignore that. So if we break out to 127, unless the Bank of Canada does something crazy and they're just completely dovish, they don't do any type of tapering, we could trade higher than that, obviously. So I wouldn't want to stand in the way, but just be a little careful trying to chase it up at 127 unless they do something kind of out of the ordinary. So I'm going to write down 127. So let's say they don't do any bond tapering and they're dovish, then, you know, we are going to go a lot higher, probably quicker. Support today. Support's going to be on, let's imagine this range holds ahead of the Bank of Canada. So let's just go to the upper end of the range. Half of this takes us right back down to 125.60. So let me get rid of that really quick. Okay. 125.60, which is right here. So I'm going to call that as support for today. Not great support, but it is support. It's halfway between in the range, right? That's what it is. Let's go into the euro. So here's the euro. Obviously, really key support. Let's just make sure you all see this. That was support, resistance, resistance, resistance. It's going to be support, right? So if we break through that support, it gets kind of ugly. So it's 119.90. Resistance is still 121. I can't rule out a move to the channel top there. We can't, while we're in this channel, you can't rule that out. I don't think we get up there, but I'm saying we can't rule it out. Like I said, I think we actually break lower because I'm looking at stocks and I'm looking at, you know, crude and I'm looking at Bitcoin. I'm thinking that we're probably going to start breaking through some of these supports, but that doesn't make me right. And that doesn't, you know, doesn't dismiss the fact that we are in a, you know, we are in a, I was going to just draw out a rectangle, but I don't need to. We're in a channel, so you got to be respectful of it. Cable. As soon as we broke back below 139, you got 139.15 or 20 or whatever that was. You could see that the stop's getting triggered, right? That was all. This was just a stop loss run, right there on a 15-minute chart. That's all that was. Breakout point. We rally. We come back down, we test support. Now we know that's good support. You can see it all through Europe and Asia. That's good support, support, support. Everybody's like, well, screw it. It's holding. So I'm going to buy it here and I'm just going to put my stops below here. And then they got stopped out. So that was an easy short. And I believe while we're below 139.50, you want to be a seller. So I think below 139.50, I'm drawing it out for you. Below 139.50, you want to be a seller. So if you can get a little pops back into 139.25, probably not a bad idea. You know, because you got good risk reward. And it's, you know, everything that we do as a trader. Whoops, sorry. I can't see what I'm typing because I have this big microphone in my face. Everything that we do as a trader is all about risk reward. Everything, you know, I'm selling here and I'm going to put my stop here. You know what I mean? I'm going to put my stop here and I'm looking for a move down here. It's like, okay, I'm willing to risk $1 to make 3. You know, that's all we do all day long. Is just trying to find a good entry point for something to play into our bias or which way we think is, you know, the market's going to go, and then, you know, have a decent risk reward while doing it. And you're going to be wrong. Hopefully you'll be right more often than you're wrong. Okay. Support. Okay. So let's figure out where support is for the cable. $138. The reason I say that, it's going to be all of this right here. That's going to be about that 138 level. And there's going to be a trend line coming through. And I bet you that's some pretty decent fib. 618. Look at that. The 618 comes in right at 138. Imagine that. Okay. Imagine that. So target should be somewhere near 138 if you're looking for shorts. That would be my opinion. Okay. Let's get rid of that. You guys have seen it. We don't need it now. So let's get rid of it. Aussie. This support's holding. So look at this. Low, low, low. Kind of wiggle around, but really holding low, because that was, you know, what Europe tried to just push it. So now a move below 77 cents. So we're on it, guys. So I'm going to go 77, but forget that. We got to go further than that. 76.60. Because let's say we clear this 77-cent level, then 76.60 is the next support. Resistance intraday. Oh, I think this is a nice little head and shoulder pattern. I know in the chat room, that's what everybody's talking about. Here, if you guys are not in the chat room, so I'll just show you really quick. Files list. Martin and Amanda were talking about this morning. So just, I'll go to, oh, here it is. Oh, here you go. Here's Martin was looking at it. Amanda. No, not the Tonyan. Aussie. No, there's Peter. Peter looking at it. I don't know what she was talking about too, but she did. Oh, maybe she was talking about it versus posting a chart. But we're all been talking about this this Aussie. So basically, the way the room is looking at it is a head and shoulder and a head and shoulder. So let's go with the daily chart. You guys know the head and shoulder pattern, right? And I shorted the Aussie yesterday. I'm on the short side right now, but there's a head and shoulder and a head and shoulder. So like if we do this, right? So that means we could bounce back to 77.60 and still be looking for a short. Okay. You notice I'm keeping everything in range purposely. Kiwi. Now the Kiwi, the 618 retracing comes in at 72.60. I don't know if we're going to make it back up there again. I'm going to write 72.30 as being resistance. I actually think 72 cents is resistance, but you know, I'm giving it the benefit of the doubt at 72.30, just in case the Bank of Canada is actually really hawkish and the dollar Canadian slips to, you know, 125.50, which it can. You know, post Bank of Canada, what I mean. So if the dollar Canadian slips back to 125.50, I mean, the Kiwi could race back up towards, you know, these highs. Support right now is going to be at 71 cents. We're in a range. I'm grabbing my coffee. I hit my microphone with the coffee mug and the coffee almost spilled all over my legs. Unfortunately, my coffee is not as warm as it was earlier. But fortunately, if I would have dropped it on my waist, it wouldn't have burnt my dingling off. All right, so let's who laughed that I just said
you're
dingling?
funny. You're
Did anybody laugh? I was just trying to get a rise at you. You laughed, right?
I left. Yeah.
You're like, oh, Blakey's ding-a-ling. Sorry. All right, we talked about the Canadian. No one else laughed? Jane laughed. Jane laughed. At least I got the ladies to laugh. That's good. As long as I can get the ladies to laugh. I don't care about you guys, honestly.
To
It's
be
all
honest,
about
that's the only thing that matters, indeed.
It is. I don't care about you guys. I care about the women. So as long as the women laugh at Blake.
John says leave the comedy to Dale. Yes, he's right.
Come on, John. Jeez, man, this is a tough crowd. Tough crowd. Yeah, Chad says, I hear they're all laughing at your ding-a-ling. It's so true. You guys are all laughing at my ding-a-ling. Oh, let's get off this conversation. All right, continuing on. And yes, we're going to leave the comedy with Dale. You know, my kids harass me all the time because of my dad humor. They say I have the worst dad jokes in the world, and I'm pretty much king of bad dad jokes. I'm self-proclaimed king of bad dad jokes. I don't know if you guys notice that as you get you make funny jokes and you think they're funny, but they're really just stupid. You guys, that happen to you guys? It should. It will.
If I thought they were stupid, I wouldn't say them. Other people might think they are.
yeah, right. Well, dude, that I say things and I laugh, and then my kids look at me like, "You're an idiot." so I know they're bad. So anyway, all right. So
it's a matter of audience. You know what I mean?
Yeah,
they might be funny, but to a different audience.
Right. It's to a bunch of dads. It'd be funny.
Exactly.
Yeah. Right. A bunch of dads are like, "Oh, that's hilarious." Anyway, we're gonna reference 91.15 because we're really struggling to move lower. But I don't want to, I have to imagine that we might actually still be bear flagging here in the Swissy. I don't want to read too far into it because I'm not interested in trading the Swissy right now, but some of you might be. I think there's better opportunities out there. I'm going to keep this. Actually, I flipped it to bearish yesterday since we're below 92. I'm going to flip it back to range because I'm really not convinced that this thing's going down either. I mean, look at the Dow. The market just opened and the Dow is ripping right now. It's so silly. The Nasdaq's heavy. It's just like, I don't know what the hell squeezes in the morning, but whatever it is.
I think today I have a feeling this will fade probably soon. At least that's my feeling.
Yeah, I mean, I'm assuming, but the Netflix, this is a whole reopening trade, right? You got to. I think Netflix, the subscriber growth is looking horrid. You got to be short.
Which, to be honest, is to be expected, right? Not only because they had capitalized for a long period of time in what was more or less almost a monopoly, but we got COVID then, and now we have so much more competition for Netflix. I mean, Amazon Prime is increasing has been increasing its library. We got the Disney Channel, we got Apple entering that market. So, quite clearly,
Hulu, HBO Max, it's just
exactly. Plus the usual other type of competition, indirect competition like YouTube, which is free. Actually, we even have the paid version of YouTube. I don't remember how it's called.
Oh,
but
I don't know what it's called either, but it is
premium, right?
It's premium. Yeah, you just skip the ads. Yeah, I mean, there's a lot of, and I'll be the first one to admit, Netflix is they have some good content, but man, they have a lot of crappy content. So, you got to sift through a lot of junk to get to the good stuff, and I think a lot of people, and I'm talking from experience from people that I've discussed, and then I got to continue on here. A lot of people really say that they're sick of sifting through low production. Like they don't want to waste an hour of their time watching a show that was produced that ends up being crap. It's like, well, that was a wasted hour of my life. why didn't I just find some good movies instead of finding this new Netflix content that was brand new? I watched it and it's the next best Bake Off. It's like, screw that. I just wasted an hour of my life watching that crap. And now, like, you know, I talk to a lot of people that really are just, you know, that's their attitude anyway. And it's interesting because Netflix have thrown a lot of money at producing a lot of, I would say, junk, right? They have good productions too, but anyway.
Yeah, they've done some good stuff though. They've done some good stuff.
There is, yeah. Don't get me wrong. I peruse as I peruse everything else though, and just so you guys know, I actually canceled my I canceled my cable subscriptions 2 years ago. I did it because, like, why I subscribe to everything else. It's like I pay $100 a month in subscription fees where I paid $150 a month for cable. And it's like, why? I don't care about watching anything live but sports, and I can watch most sports online now. So, you know, anyway, that's a whole different conversation.
In any
really
case, definitely a lot of competition in this market.
There is
a lot of competition.
And now that we're getting the reopening trade, and look, we will be past COVID at some point. You know, Netflix will suffer, and I'm sure, you know, and a lot of these NASDAQ growth stocks will. So let me get through charts. So dollar MEX, ascending wedge, breakout. If you guys will notice, I put in a new pattern in play today. Okay, long, and also so did Andre, putting in a crab pattern. But we're out of the ascending wedge. I believe above 20.01 is really bullish. And while we're above 1975, you have to remain bullish now, because that's going to be these lows here. Well, the lows were 1977, but I guess we could write that. I'm more, you know, okay, if it breaks below the lows for whatever reason, but I'm bullish now that we're coming out of that wedge. Okay. Yen. As far as I'm concerned, I don't care if, you know, the dollar yen goes to hell in a handbasket now, because I'm short Canadian yen. I'm, you know, about ready to short some euro yen. And so the dollar yen, this is the scary one to me. The Swissy, I'm not really so sure about, but the dollar yen is a big one, because, and let me just show you. I know you guys have seen this and we talked about it. So let's go over to the weekly chart. So on a weekly chart, we broke a 5-year trend line, got everybody bullish. This happened just before COVID lockdown happened. Same thing happened with the dollar yen, right here, back in February. You can see we broke that trend line. Everybody got bullish, and then COVID lockdown happened. We broke. Everybody got bullish just last month, broke above the 6-year trend line. Then what do? We turn around and we break down. So think about that. All the shorts, people that were selling here, all the people that were expecting us to reverse here got squeezed, so they had to get out. Everybody that got long on that breakout, they get squeezed out. Now that you're below this support, you know, while we're below 109 or 108.50, because, you know, the highs yesterday almost wiggled me out of these yen pairs. It was 108.55. While we're below 108.55, you got to stay bearish. And currently, 38% retracement comes in at 107.75. That should be the next target. Okay. All right. Dollar index. So here's the dollar index above 91.50. You can see it. We have trend lines all over here. At this, if we get above that, I think it turns bullish. So I'm gonna write down 91.50. Yeah, I could even go further than that. 91.55 maybe, because that's where the trend line is going to come in. Somewhere around there. All right, support is, remember, this was the 200-day moving average, guys. I'm sorry, I mean the 618. It was the 618. I don't know why I just said 200-day moving average, because that's where I think we're going. I said that earlier. But this was the 618 retracement. So just realize that this is very key support now. 91. And I would argue at this stage that even any dip back down to 91 is going to find buyers. So I'm going to write two things. 90, 80, 91. Those are both levels of support, in my opinion, on the way down. US dollar, Norwegian krona. This right now has created a bit of a false breakdown. So while we're above, let's just call it this low right here, 830, basically 832. We're back to range. I'm going to flip it to bullish if we get back above, you know, well, I don't want to really flip it to bullish. I'll just keep us in range for a while because, you know, if this is truly a Wyckoff, then what this will do is do this. That's what's going to happen. So I'm going to keep us in range for a while, but I'm not putting us bearish unless we get back below 830. I'm not, because it's actually a false breakdown at this point based on what happened yesterday. But really resistance is at 843. As I told you guys yesterday, I got out of my gold, which may have been premature. And obviously looking at today, it was premature. What an idiot. Damn it. What an idiot. I was thinking to myself, you know, well, it's above 1760. I might as well just hold on to it. But then I took it off because I was more worried about the dollar moving. God, look at the equity markets. What the fudge sickles is happening right now?
Risk is on like Donkey Kong.
Yeah. And I don't know why. Well, I mean,
Me neither.
I guess
more buyers than sellers.
Yeah.
The usual.
I hate that answer more than anything. Yeah. More than anything. But Nick Paragula, who used to be on the Wise Trade team for, you know, he actually was a trader on the floor of my. Oh, hey, we got 10 minutes till the Bank of Canada. He was a trader on the floor of my brokerage firm in Dallas. He used to say, getting long like Donkey Kong. And then he used to say, you know, whenever somebody would ask, you know, why is it going up? He's like, more buyers and sellers. And it's like, dude, I'm going to smack it. He used to say the same thing all the time. And then he'd also say, ripping like Scottie Pippen, which is, you know, as Scottie Pippen was Michael Jordan's. Was it Michael Jordan? Yeah, Michael Jordan.
Yep.
Chicago Bulls. I actually spent my 30th birthday with Scottie Pippen.
Seriously?
Wow.
Yep.
Well, like washing his car or something.
At the Blue Martini. No, at the Blue Martini in Tampa.
Nice.
I had to work, and so I had to work. I was in Tampa teaching some traders how to trade. Oh, here we are, resistance. And we're at 26.26, by the way. So the next resistance is going to be 26.70, 26.80. Remember that? Okay, we're heading there. So I was I was in Tampa, and it was my 30th birthday, but I had to be there to work. Wasn't getting out of it. And so I said, well, screw it. I'm going to go to the Blue Martini, which is, it was a restaurant that happened to be next to and it was a bar, and, you know, there's a lot of people there, and it happened to be next to the hotel I was at. And so I walk in there, and so I'm in there by myself, having a drink, and this is kind of early. Bartender's like, "Yeah, how's it going?" I'm like, "Oh, good. It's my birthday." And he's like, "Oh, here, get you a shot." And then I look over, Scottie Pippen and a couple of his friends, and obviously some women were around there. And I look over at him, and he goes, "Hey, it's your birthday?" And I'm like, "Yeah, I turned 30 today." He's like, "Buy him some drinks," and so he had the bartender.
I hope you asked for an autograph for a birthday
Nope,
present.
I didn't. I'm not that kind of guy.
I hate you.
I don't do that to people. I ran into Tiger Woods. He was standing right behind me.
Who cares about
really
Tiger Woods? We're talking about Scottie Pippen.
That's what he says, but he's autographed his underwear, right?
Yeah, right. So I'm going to write down 2550 as being support here, because
Tiger Woods is nobody in comparison.
Sorry, guys. I'm going to just kind of get this through because we have Bank of Canada.
Go
I got to get in the chat rooms here. 50. Obviously, you guys know that 50,500 and 60K. Nothing's changed here. We're just kind of stuck with Bitcoin right now. See, it's so stable that it should be a currency. Who needs the Fed? No one needs the Fed for stability. No one needs the ECB for stability. We're in a range right now. S&P squeezed out. Anybody that was short overnight just got squeezed out. So let's go over to the S&Ps. We're still on the flag. So you go like this, and let's figure out where resistance is going to be. It should be at probably this trend line here, 4160. And we're going to write down 4140. Well, what you guys know, 4110. That's key. And resistance now is 4160 versus 4200. And remember, it's bullish while we are above 4110. All right, so there you go. And dude, the dollar Canadian is just taking off. Here's the thing. I am a firm believer about Canada is stuff gets leaked in Canada, probably worse than any other country,
except the UK.
Well, I don't know. I've heard over the years that things slip, and lot of insider information floating around.
Here is a good question we could have asked Blanchflower, sorry.
Yeah.
What's that?
If stuff gets leaked.
Oh yeah, that would have been yeah. But I do think with the and you know what, FX Macro just said may be leaked. Shared Bank of Canada maintains its QE purchases. Yeah, I mean, look, the dollar Canadian's been strong all day, and if
somebody knows,
yeah. So interesting. All right, well, hey guys, I'll leave it to you. Here's your bias chart in case you didn't get it, Stelios. There it is. I'm going to turn you over to Steve and Stelios. I'm going to go grab my coffee, warm it up, and get into the chat room for the Bank of Canada. So you guys have a great one.
You do, mate.
And by the way, as far as the Canadian news, look, you guys who have been listening to me for years know I've constantly said that, especially during employment data. Those Canadian numbers get leaked all the time, and you've heard me for years say it. So it's not surprising to me to see the dollar Canadian race up like that. Okay, I'll see you guys.
Bye,
Thank you, Blake.
Thanks, guys.
Okay, so we have a few minutes till the Bank of Canada. What do we have? Risk is getting bid. Surprise, surprise, and the metals are doing well. And
silver is 2% up on the day, and gold 1% up on the day.
Interestingly, the dollar is gaining today, and metals are also performing well. I mean, we've seen them.
If you remember, I mentioned that yesterday. That I reminded that we can actually have metals on the dollar go higher on occasion.
Yeah, as we've had them the other way. We've had when was it after the top in Not in 2011, the other one. Anyway, it's yeah, they can go both ways, and they can decouple for a while. You know, it doesn't. It's not.
Indeed, they can.
What else do we have? Data-wise, we had some data probably worth mentioning today. CPI New Zealand beat slightly. Retail sales from Australia beat as well. CPI out of the UK 0.7% year on year compared to 0.4 last print, but it was expected to go higher more. We're still way below the 2% target. So I don't think they're anywhere near doing anything to tighten. And like Danny said on the interview, the Scottish, if we do get Scottish elections, then the whole issue of Scottish independence is going to come back.
Of
and
course.
the last vote they had was what, nearly 2 years ago or 2 years ago, somewhere there.
Yeah, and I think it was what was it, 52-48, something
it
like
was
that.
it was tight. Yeah, it was tight. And
Yeah.
now, my guess would be it would be tighter, but actually it would probably be the other way. It's but it remains to be seen.
An argument that will be used, of course, in such a case is that, you see the fear mongers, they were saying the same things about Brexit.
Yeah, exactly.
So that is definitely going to be an argument, being used in this case. I'm pretty sure about it.
Yeah, and the Scots were telling, I remember in the last referendum, they were saying, oh, you're saying, the big argument was, you're saying that it's much better for the UK to be out of the Europe and etc., and it's going to be better. Well, why not the same for Scotland? So
yeah,
you can't say one thing for one and then the other for the other. But anyway.
Theoretically speaking, you can, because I mean, what is good for one economy isn't necessarily good for another. Best example for that is Greece, right? I think that it's very likely that the UK is going to do eventually, over time. Of course, initially there will be costs and issues. It's going to do better on its own outside of the European Union. But I think the opposite would apply to Greece, for example. So,
the benefits outweigh.
Yeah, exactly.
The benefits outweigh the disadvantages.
I'm not an expert in the Scottish case and in the Scottish economy. I mean, I've read some arguments, but I have enough experience to know that reading arguments from both sides, is never gets you the solution, because of course each side is going to present it, as ideally as possible, and unless you have an actual opinion, it's not easy to distinguish which of the arguments have merit and which have less or whatever. So I don't have an opinion of if Scotland would be better on its own or not. But all I'm saying is that I think it's something that you can't answer without examining the facts up closely. So but in any case, it's their decision, and as you said, I think it's very, very likely that next time they're going to vote positive, especially following Brexit. And I think that's something the market should probably start pricing in.
Yep, I agree. Okay, we're getting the headline that the Bank of Canada has said that because of the ongoing recovery continues to require extraordinary monetary stimulus, it has maintained the QE purchases, and they were expected
what a surprise.
to start paring back, right? So any second now we get the official confirmation. What's the USD CAD doing?
Paring back its prior gains, actually.
Yeah.
It has now gone negative on the day. Quite interesting.
Maybe there's something else in the statement. I don't know. Let's see. Well, anyway, okay. We'll have a look at that. What else do we want to look at? Cryptos who have been pretty wild.
BOC unchanged. Let's see. Language.
The dollar CAD keeps going lower.
Yeah, so whatever. Oh, they tapered.
What? Really?
Yeah. Let me see.
Then what was that other?
They did taper.
Yeah.
They did.
It reduces weekly asset purchases to 3 billion per week. 3 billion Canadian per week.
What was it before? Do you remember, per week?
No, but it doesn't really matter, Stelio, because I don't think the market actually reacts to the actual number, but to the gesture. You know what I mean?
Yeah.
So
Yes,
even
true.
if they reduced it by like 100 million, which is nothing, I think the market, what the market takes out of it is the gesture and
Yeah,
not the actual impact.
Yes.
So it
Okay,
was a head
interesting.
fake, actually.
So who had that? Who had that headline? MT
No idea, but
Newswires.
somebody, I don't know if somebody intentionally, but somebody seems to have misled.
MT, whatever that
Newswires.
is.
Who is that? Yeah.
I don't know.
Yeah,
Well,
whatever
that's
it
the
is,
thing.
somebody really misled some people in in buying the top there.
Right.
Wow. Okay. Do we have any questions? Anything you want to have a look at?
Yeah, absolutely. So let me open the chat box.
Laura is asking GDX for gold miners. It's SIL for silver miners and GDXJ for junior miners
I
gold
know.
and SILJ for silver junior miners.
Here it is, and that is
I
why
I bought some on the open today of all of those four.
exactly, and that is why I'm finally buying with my friend Dimitris today, because I was either expecting a lower low or a breakout. So we've had a breakout, at least in my technical view here. We've had a breakout in GDX, and I think GDX is on its way higher. Now, doesn't really matter to have a look at the GDXJ. Trust me, it looks exactly the same. As you see, the silver miners, that's the last time we checked them there, they didn't produce a lower low. They might have produced a triple bottom here, there, and there. So haven't broken out of the equivalent big channel yet. But I kind of doubt that if this is a real breakout in GDX, I really doubt that silver miners are going to be doing anything much different. They seem to have some kind of a lag, but I wouldn't be expecting this to last
By the way,
longer.
Steve, Canada were buying 4 billion per week, and they've tapered down to 3. So
Okay,
that's
so it was a okay,
25%. Yep.
yeah, so it was a decent
And that was
reduction.
expected, by the way. That
Yes.
was expected.
Yes. Yep.
Yeah, but somehow they misled people believing that they actually don't. So okay, the other thing I want to talk about, USD NOK. This one and Blake's beloved Salma, they had a very nice reversal yesterday. In the case of USD NOK, we actually had a piercing line here on the daily. In the case of USD MXN, we had a bullish engulfing. So nice candidates for reversal candlesticks. Although, for example, in the case of USD NOK, for the time being,
You're back testing. You're back testing the breakdown, right?
Exactly.
Yeah.
In the case of USD NOK, for the time being, I wouldn't, just trust a single candlestick to like close my position or go the other way.
Yeah, if you're
Simply
short,
because
you actually like this candle.
simply because we back tested the trend line support, and for the time being, of course, it's very, very early in the day, but for the time being, we don't seem to have the momentum to actually break through it. So as long as we're not back in the previous ranges territory, I'll refrain from acting on a single candlestick. Now, we go back within the area of the previous consolidation after like having broken down for a couple of days. Yeah, that's then quite a worrying sign that perhaps we satisfy the minimum expectation of one lower low after the triangle, which that's always the minimum expectation of a triangle, and something different might be happening there, and we might have trapped people that were very, very late in the game in selling, after that breakdown, and now they're going to be the bug holders. But in any case, that's all just explanation of the two ways of thinking here. As I said, unless we break back within this territory, nothing has technically changed. But keep in mind that if we do, and if we close on the daily there, I'm probably taking some profits finally here, because I've had a very, very, very long run, and that's going to be quite an important signal for me. Now, euro, a nice combination of candlesticks for a reversal. It's not an evening star formation unless today we manage to go below half of that candlestick, but we might actually end up having an evening star formation here, right? Because we had a strong white candle, we had a pin bar, which could have been also a doji or a spinning top, any of those would do. And if today produces a black candle that will close below half way the body of that candlestick, then we have an evening star formation. That is also a reversal candlestick, right? So keep that in mind. Equivalently, the DXY is working possibly, if it remains strong by the end of the day, on a morning star formation. So yeah, I mean, 61.8% fib was held for the time being. So from a risk reward perspective, somebody can be long here, and I wouldn't have a reason to accuse them. I mean, we haven't broken down from this formation yet, right? So yeah, the trend is lower in the dollar, the trend is higher in equities, but from a risk reward perspective, we're seeing some reversal signals, right? I would, especially given the environment, and especially given the fact that we haven't had any really negative news coming through that are behind this move, I would probably give it a little bit more time to see what's happening. But other people might want to jump the gun a little bit. Now, in the case of USD/MXN that I mentioned before, I want to focus more on the 4-hour chart, because this is a potential reversal formation I'm looking for, this descending wedge here, right? So we've seen this type of price action. We're coiling as we're going lower, while RSI has started diverging somewhat. So you want to be long the dollar, and this happens because we get some risk of Blake is the first one that will tell you that this is one of the best candidates to reverse higher, along with the usual crosses, which are Euro Aussie, Euro Kiwi, right? Pound Aussie, and Pound Kiwi. I have to say that for the time being, in the longer term charts, neither of these, look at Pound Kiwi, look at the Pound Aussie, neither of these look bullish to me, right? They still look like they're in bearish consolidations. Of course, they can keep unfolding for quite some time, right? You can see it here. But in any case, expect them to respond positively in any risk of type of trading, right? Because usually in these cases, the first currencies to be sold are the so-called commodity currencies. And contrary to that, euro and pound perform better. So that's it. Let me check questions. Euro Aussie. Oh yeah, I just covered that. VXN looks like it's head and shoulders in the, you mean intraday? Probably spelling VXN. So the VXN is this one. It's the volatility index for the Nasdaq. Now, keep this in mind here in the VXN, right? We did break down to new lows and we kept pushing lower. We've had this 2-day jump, but look at this. For the time being, we've just retested this broken trend line support as a resistance. So in order to get something going in the case of the VXN, I think we need to see a daily close above 25.26. Okay. So it's a nice jump for the time being, but technically speaking, nothing has really changed. Now, somebody else asked for the DAX. Listen, I think the DAX is in danger after some time, to get a very decent pullback, because the exact thing I described about a potential outcome in USD NOK that would get me not to be bearish anymore. We've had the exact same development that has already happened here in the DAX, which is we had this little triangle, we broke above it, and then we reversed, and now we're within that territory. So I think this is a very, it's a red signal in essence. The fact that the market managed to push to new highs, but didn't manage to keep that for more than a day and a half. It's probably a worrying sign. I think we've run out of steam here. So I think it's very likely to see a deeper correction in the DAX, which, to be honest, I mean, just look at this move from the COVID lows, right? Especially this last part of the trend higher that started in the end of October last year has literally produced no pullbacks, just some periods of consolidation. So we've gone since the beginning of November. It has been a one-way street, literally. I mean, you could buy at any given day, and worst case scenario, you would have found at some point yourself like 3-4% out of the money. That would be the worst thing that could happen to you since then, which is unbelievable. So I would be very careful here. I would be very careful here. I think the chances to see a deeper correction lower have substantially increased. CAD news, yeah, we talked about that. Palladium, okay, palladium and platinum. So here is palladium, which is pushing to the all-time highs. We're now just a breath away from them. Unsurprisingly, I mean, why not? I think this time we're going to break through it. 28.79 is the all-time high. Platinum still consolidating, so I'm still not certain if we have one more leg lower. It looks to me exactly like silver did some time ago, or crude is looking like now. Which means I'm not sure if we've already found a low over there, or if we need one more leg lower before we find the low and continue higher. So I'm rather convinced that we're headed higher. I'm not certain we're headed higher from here. I think we might need to see prices closer to 1,000 and then continue to the upside. So, the jury's still out, as they say. Copper, on the other hand, doesn't have worries like that. It has broken through this triangle, and yeah, momentum is somewhat lackluster, but I think we remain bullish. I mean, technically speaking, there's no other argument to be made here. SBSW, what is that, mate? SBSW, is that a stock ticker? SBSW, let's see what it is. This one, huh? Yeah, it looks bullish. You can see here why. There it is. So, until something changes, I mean, oh my God, this has been. Let's see. This looks like a big channel. Yeah. There you go. So, would I be buying it here after this run higher? Nah, I probably wouldn't. But, on the other hand, technically speaking, it has done nothing wrong other than momentum divergences. This thing hasn't done anything wrong yet, so keep that in mind, okay? BTG, let's see what this is.
I think it's a gold stock.
Oh yeah, there you go.
Almost like you wrote. Come on, you're not exactly right there. Come on, Steve.
Yeah. I think there is no question that this has been a very, very strong bullish breakout. Just look at this. So keep, look higher. As simple as that. Look higher. I think we've already seen a breakout here, and I see no reason why it should stop. I wouldn't be surprised for this to lead all the way to new highs. Most likely it will. Okay. MJ and YOLO. MJ, is that Michael Jordan? MJ, ETF Managers Trust, Alternative Harvest. Okay. Yeah. I think it's going to end up breaking to the upside. Now, not easy to say when. So, because, you can draw support in many different ways. You understand what I mean? So I would pay more attention to the bullish trend line, right? And probably in this case, buy a breakout to the upside instead of trying to assume, I can pinpoint the bottom. YOLO. Yeah, I would say the same thing here. There you go. Now, once again, a little bit uncertain about the trend line support. Could be this one, right? Yeah, but I think this is a corrective pullback. So once we break through this, I think it's headed higher. Let's also have a look at, GDXJ. Yeah, since we mentioned it, here's GDXJ. Also breaking out. It seems to be a little bit behind, just a little bit behind. For your question, CBOE, as you see. Just a little bit behind from the GDX, but it seems to be breaking out probably today. Right, so there it is. Keep also an eye having to do with GDXJ to this bigger channel, because a first area of resistance might be there.
Yeah, it's 20% higher though, right?
Oh yeah, absolutely. I mean, that's not an argument that you shouldn't be buying it. It's like, just have a look at that. Once we break higher and start moving, perhaps you want to keep an eye on this trend line. Okay, so I think we covered more or less your questions.
Yes.
So see you tomorrow again, guys and girls.
Thank you, everybody. Thank you.
Who was that, Stelios? Kaliroi, Dimitra?
That was Dimitra. Yeah.
Γεια σου, Dimitra.
Thanks, everybody.
Bye, mate.